I'm Matt Bouchard with NAREITWeek.com here in New York City for REITweek 2015, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Jon Bortz, Chairman, President, and CEO of Pebblebrook Hotel Trust. Jon, thanks so much for joining us.
It's a pleasure. Thank you, Matt.
Now, 6 months ago, you said that there was a Goldilocks scenario playing out for hotels in the U.S. gateway markets.
Right.
So is everything still all right?
I think it is. Operating fundamentals continue to be terrific. The economy continues to move along at a modest pace. That's been very good for our industry. People are traveling, business, leisure, group, convention. People are meeting, and all of that's very favorable. So we're in an environment today where demand continues to outpace supply growth. I'd say the demand is running at levels higher than it has historically because we are benefiting from a global secular trend in growth in travel as countries around the world create middle class and upper class people, and the internet exposes people to what there is in the world to go travel to. And supply is limited. So we've seen just a little over 1% now of annual supply growth. So still a big gap of demand over 3%, supply over 1%. Pricing power has been very strong, so rates have been increasing in the 4.5% to 5% range. So it's a very healthy environment, very well controlled, not a lot of risk in the environment other than some change in the macro economic cycle, which seems to be far off, or some event that, of course, none of us can anticipate.
And with the dollar being so strong in the last 6 to 12 months, what sort of impact is that having on travel into the U.S.?
So it really varies by country, and in particular, two things. One is, obviously, are they tagged to the dollar? Some countries are, some countries are not. And then two, what's their economy like? So we've seen some weakness and softness in countries like Japan, where the yen has moved about 30% in the last 2 years. We've seen some weakness in parts of Western Europe, which are both weak economically and have had a more difficult time from a currency exchange perspective. And then we've seen strength from China and Asia, and Africa, and some parts of South America.
And do you anticipate the renovation activity, redevelopment activity in your properties will continue at a similar pace? I know you've been very active with refurbishments.
Yeah, what's interesting about Pebblebrook today is that as we buy assets, our focus has generally been on hotels that will benefit from a redevelopment and, in many cases, a repositioning to. Our focus is really on providing a unique experience in our hotels and really making them part of, when you go to Portland, you're trying to get the whole Portland experience and go to the museum and eat in restaurants and go to the craft breweries. But when you've gotten to a hotel, it's just a hotel. It doesn't have anything to do with Portland. And so if you go to Vintage today, which we just redeveloped and reopened, you'll feel like you're in Portland. We've got the street art, we've got the grunge, we've got the edge. And yet we have a wonderful personal experience. So as we've bought these hotels, and we bought 6 last year, those will go, what we say, under the knife to get redeveloped either late this year or late next year. So the renovation cycle for us is going to continue, particularly if we continue to have success with additional acquisitions.
Great. Jon, thank you so much for joining us.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.